Hello, everyone. My name is Matthew Frailey, founder of BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, like you see here with our 21 SPY and ES mean reversion systems with about 90% winning trades, and of course our new KISS Trend following systems, which you got to check out. Been doing this since 2003, so quite a long time, but only really been focusing on YouTube for the last year. And YouTube's channel is starting to grow a bit. I'm humbled by that. Thank you for all your support. And let's go ahead and start with this video. So this is our backend recorder for our standard web page format newsletter. I'm going to go ahead and start that recording now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Monday, February 5th newsletter. Tonight's newsletter, as you can see, divided into 7 major sections. As you know, Steve Nelson did the newsletter on the weekend. And Steve doesn't post to YouTube, so if you're just viewing us on YouTube, that's another reason to subscribe to Breakpoint Trades. In addition, that if you're a subscriber to Breakpoint Trades, you get real-time alerts to our mechanical trading systems, 5 detailed newsletters a week, etc. Okay, I typically upload 2 or 3 videos on YouTube a week, so you get a lot more being a subscriber. Obviously, definitely something for you to consider eventually. Again, thank you for all your support. Again, you can see this newsletter is divided into 7 major sections. And as far as the market, it was essentially an inside day. Basically, the S&P traded within Friday's candle. And for the day, the S&P lost about 0.3%. NASDAQ gave up 0.2%. The Dow lost 0.7%, while the Russell 2000 small caps took it on the chin, losing 1.3%. The US dollar had a big day, rallying 0.5%, and the 10-year Treasury yield rallied 3.25%. Big old rally there. Big move in the dollar and rates. Again, one thing I'll say, despite Friday's big rally, and I'm going to be showing some charts on this tonight, the breadth is extremely poor, extremely negative. Friday's breadth was 2 to 3 negative to decliners to advancers, and market Friday was a big update. It just shows you the narrow breadth this market is in. You know, it's 7 stocks. It's Meta, it's Nvidia, Microsoft. That cannot continue forever, but again, for now, market is uptrending, but we need to be aware of those guys. As far as the wave counts, we still favor one more up move in the market to complete that wave 5, which we've been showing in the newsletters. An alternative is that we already put in that little wave 5. But again, that's an alternative. Another possibility is that wave 4 is still unfolding. We have sort of an ABC with a C move down coming, then we get before C move to the downside before completing the upside move for that wave 5. So we'll see. Here's the key events for this week. 10-year Treasury, 10-year auction note on Wednesday, initial jobless claims Thursday. We have 6 Fed speakers this week, and Powell in 60 minutes. And for the earnings on the market, about approximately 20% of the S&P 500 companies are reporting. The market has been holding up in earnings season, but as we get through these, it'll have less reason to hold up. But for now, nothing's changed. Next, before we get into the index analysis, again, like a broken record, I just want to keep reiterating to you guys, because about half of our subscribers are signed up to receive automatic email alerts to our KISS systems. So if you're a subscriber, I implore you to go there and set up your email alerts. Just go to the KISS section, go to the favorites, got to click that box and set some favorites like I show here. And whenever there's a change to one of your favorites, the system takes an entry, it moves its smart trailing stop up, it'll send you a nice clean email that's very easy to follow. These systems are fully automated. You can follow them, or you could, use them to manage your portfolios. Awesome resource. There's nothing out there like it. And again, if you're on YouTube, that's another reason to subscribe, so you can get access to this. You can see on my favorites list the huge percentage some of these are up. And these are all real time. These all trigger. They're not back tested. All these signals are real. Some of these, CrowdStrike has raised its stop 23 times. That's awesome. And UPRO, that's up, I think it's up actually 40%. This is an old image from last week. And I know quite a few subscribers on the website took that trade. Next. Image number 3. So here, right on the website, here's UPRO from the KISS system. Just to show you an example. The other cool thing about the KISS system tables, guys, we provide live chart URLs like this. So here's the chart right from the website. This is UPRO. The vertical line, that's where it went long. So it didn't catch the exact bottom there in October, but still caught a nice trade, and to put its initial smart trailing stop at 37.40. You can see how it just methodically raised it up over time. Current stop is 55.60. Trade is up 40.4%. You can see it's raised its stop 14 times. Isn't that cool? And you can see the last trade was a winning trade that exited there in, looks like maybe August, September, something like that. There's a lot of information on these charts. You have a moving average ribbon, you have MACD, you also have the mark count. That's a DeMark 13, for example, DeMark 9. You can see those called those little trade lows. The A indicator is what we call amateur hour. It's where volume is decreasing on an up move. So kind of like small traders chasing a move. A lot of times these can set short-term highs or lows. Okay, but very excellent resource. I know Greg from the website, I actually met him in New York. He actually took this trade in real time, which again went long on November 3rd, and he was up 40%. Congrats, Greg. Awesome job there. And the reason I keep harping on these KISS systems is because I want more of you to partake in this. I developed this. This is the culmination of 25 years of me doing technical analysis and system building, and I just want more people to experience it. So consider, again, if you haven't been using this, start using the resource. Another one, image number 4, here's NVIDIA from the website, KISS Systems. You can see it went long here in January, put the initial trailing stop at 458.90. Current stop is now 633, trades up 39%. Raised its stop 9 times. Okay. Some other useful information, guys, on these tables. We show the percentage away from the recent STS. So right now, this price is about 8.68% away from the current stop. That's important because sometimes, when these get really close, you have lower risk situations where maybe you could take a trade with a tight stop if the system's already long, but you're not in it. Or, let's say this is 15 or 20% away. Well, things are very stretched there. Maybe it's a time to take some profits or definitely not enter that. So we've got a lot of useful information on here. So cool stuff. Next, let's go and move back to the general market. So this image shows the heat map from Friday. So as you know, Friday, the S&P was up 1.1%, NASDAQ was up 1.7%. Normally, that would be a down day when you see all this red. What's the green you see? Again, it's those 7 stocks, Meta, Amazon, NVIDIA, Microsoft, Meta, TSM, so AMD, but mostly red here. Next. Image number 6, here's one of the breadth indicators. As I've been stating, breadth has been horrid, and you can see it dropping off. This is the NYSE issues advancing. Look at this declining. Look today, huge decline, while the S&P has just been marching higher. Again, that divergence can't stay in place. It could stay in place for a while, but it is something to be aware of that eventually, could lead to the next correction. Okay. All right, let's go and move on. Item number 7 shows the index sector table, what transpired today. You can see the index is down pretty nicely, especially the Russell, S&P down 0.3%, NASDAQ about 0.2%, Dow down 0.7%, Russell down 1.3%. As far as the market sectors, the majority of the 21 sectors here were down. Technology, again, was slightly up. Semiconductor and technology, again, that's been the theme. The tech area, these big cap stocks, they're all in there, those 7 major stocks. Healthcare, drugs slightly up, but everything else down. Currencies, US dollar, big rally today. It's a big day. Crypto was down a little bit. Commodities, despite that big rally in the dollar, most of these commodities didn't do, fairly So quite a few of these were up. Well, the index, DBC, was up 0.4%, largely due to crude oil being up about 0.7%. Gasoline, unfortunately, up 2.8%. Copper down 1.3%. It has sort of a head and shoulder look, which I'll show when we get to it. Weakness in the ags, as you can see, wheat, coffee. Weakness, obviously, in the precious metals here with that big, strong dollar, especially the stocks. They continue to lead to the downside. I have no interest in being long that sector at this time. In the bond market, again, big moves up in the 10-year, 30-year. Next, image number 8. This shows the economic news calendar. Like I said, I already listed these for the week, and also 20%, approximately 20% of the S&P 500 companies are going to report this week. Okay, let's go and jump to these index charts. I don't have the Dow chart in here tonight, but here's the weekly S&P chart, so we'll start with that. So again, this upper trend line is a resistance area. We tagged that last week, pulling off of it a little bit. Obviously, the trend remains up. On a good correction, guys, obviously, the previous all-time highs, which we took out, is now big support. So that would be a big support area on a pullback. That and the 4,600 area. Next, image number 10. Here's the daily view of the S&P. So we're going down to smaller time frames. As I stated last week in my videos, that pullback, we did not break symmetry. Remember, to break symmetry so that you note where the uptrend began, which was in the October lows, the largest pullback was 112 points. That pullback last week was much less than that. We didn't break symmetry. You needed to break below 48.19, so no symmetry break. We rallied again. And we do have a little RSI divergence here. Some MACD divergence building. The 60 to link stochastic is embedded above 80. Many of you may not have seen that stochastic. Most of you use a 10 stochastic or a 14 stochastic. This is a 60 stochastic. It's a good trending type of stochastic. On trending up moves, it'll remain above 80% for long periods of time. When it falls below 80, that's something to be aware of. But again, nothing's changed. We're still above short-term moving averages here. The 5, the 9, the 20. And this is what I was talking about, the 4,600 being big, big long-term support that I think will be tested when the market finally does put in this fifth wave high. Next. Chart 11, here's a zoomed in daily view, shows a nice clean uptrend channel. Okay, so that's another thing to monitor. Should we eventually breach this uptrend line, that'll be important. But for now, we're in the uptrend channel. Next, chart 12, here's the KISS system. I already showed it on a couple stocks. Here's on the S&P 500. So last week, it raised its stop pretty tight up to 48.23. You can see it went long there in October 31st. Excellent entry. Initial stop was at the swing low at 41.04. You could see it methodically moving it up, keeping it wide enough not to be hit. And again, awesome. Congrats to anyone who followed that. That's why that UPRO trades up so much. Had a similar trade. And this is indicative of a lot of times what these KISS systems will do. They'll catch a big trending move like you see here early last year into the July timeframe, and then you'll get a whipsaw. It doesn't always happen that way. Sometimes you could have big 2 trending moves in a row, but a lot of times you get a whipsaw. That's just the nature of trend systems, and then you catch a nice big winner. And I mention that because it's possible that when this finally does exit, the next trade has higher probability from one of these whipsaws. It doesn't have to be, but it's something to think about. Next, chart 13, here's the 4 time frames. Again, nothing to say here. Still holding the ATR in the daily, half day. We have that resistance cycle on the 78-minute. You see this kind of move up here. This is what I'm talking about, and I talk in the comments, where perhaps this is a A, B, and then we get a little C move down before another move up. Something to consider. Next, chart 14, here's the half-day chart. Again, we're monitoring this 5 wave count. We're still favoring another move up in this 5, whether we get another little pullback first. That's what we favor. It doesn't have to do so. You have a MACD divergence setting up here, RSI divergence. So again, to me, if you want to play the long side, I think you don't have a good risk reward, or you don't have a lot of, it's kind of like squeezing blood from a turnip. Maybe you get another, move up to the 5,000 area, a little over it, but you don't have a lot. Just be aware, once this completes, then we're expecting a, better pullback in the market. Number 15, here's a 60-minute chart. Just shows you a nice clean channel to monitor. And you can see this sort of kind of bear flag look to it there. You know, that's why I put out the idea where it's possible we could see a move down first. Number 16, here's a 30-minute chart. So this shows you what I'm talking about. So it's possible this is like a little A, B, and then we get a move down, perhaps starting tomorrow, and a C, then we go up. Or, again, it's possible that the low is in there and we go right up. So one of these two scenarios are what we favor for now. Number 17, here's another 30-minute chart just showing a nice clean channel to monitor. And finally, chart number 18, here's a 10-minute view. So this shows a wave count we discussed last Friday and, of course, on the weekend newsletter. So this shows a nested 1-2-1-2. It counts better that last high at 49.75 is a wave 5 of 3. Alternative would be a wave 5 that we already put in a high. But, you know, we view that as an alternative at this point. We're favoring a move up to here to complete the wave 5. Plus, we're so damn close to the 5,000 round number. Markets like to hit those. So we got, what, 25 points away? To me, it would be best to tag at least the 5,000 before a nice pullback in the market correction. So really, you don't want to see price go below this, too much below this 50% fib. Otherwise, it puts this wave 4 in jeopardy. Next, chart number 19, here's the Qs. This is the weekly chart. Again, I show this because we have this wave count on here. When this move ends, I'm looking at this to be some sort of wave 5 of 3. Then that's why I'm looking for that deeper wave 4 pullback. And then if this is the true count, yet another move up in a wave 5. Maybe that'll coincide sometime, you know, into that election time frame. Next. Chart number 20, here's the daily. Again, remember, we didn't have a symmetry break last week, so we continue to hold up nicely. Just a nice clean channel to monitor. So at minimum, you need to break this channel to the downside, otherwise we are uptrending. Chart number 21, here's a 60-minute chart that shows that wave count again. So like I said, we favor that as a wave 5 of 3, that last high, alt wave 5 there. But otherwise, well, this did make a new high there. So again, you could see this little down move, up move. So is this little A, B, C, kind of like the S&P. We either go right up, I think, or we pull back first, then we go up. Chart number 22 is a 30-minute chart, shows what I'm basically talking about. And this breaks down the wave counts. 5 waves for A, B, 3 ways up, 5 ways down for C. Move up. Could this be a little A, B, then a down move in C, then go up, or we go right up from here? Chart number 23, there's a 15-minute chart showing that wave count as well. Next. Chart number 24, here's the KISS system for the Qs. Again, just like the S&P, awesome entry there in October 31st, raising its stop all the time. Current stop is 412.70. Next, chart number 25, here's the 4 time frames. Again, similar look to the S&P, quite honestly. You can see that resistance cycle in the 78-minute, kind of a sort of a bear flag look at the moment. And that does it for there. Let's move on. Chart number 26, here's IWM small caps. Been kind of coiling here, leaking a little oil here, closed slightly below its 50-day moving average for now. See if that can recover or not. Chart number 27, here's a 2-hour view. Leaking oil here a little bit. Let's below this coil trend line. We'll see if it can regain it. And chart number 28, here's a 60-minute view. Shows the same thing. And of course, chart number 29 shows the monthly bigger picture view. Long-term resistance here, or support at 166, I think. And resistance at 205.50. All right, guys, that does it for the major indexes. And I think futures are, let me take a look here. Yeah, futures are up a little bit tonight, but again, not that much. We'll see how they fare in the morning. Moving on, chart number 30, here's the VIX pulling back. So the VIX was down today with the S&P down. So we continue to see this odd behavior in the VIX. Obviously, people hedging, stuff like that. But whenever the VIX starts moving the same direction of the S&P, you always want to start paying attention. Sometimes that starts occurring near inflection points. Chart number 31, here's the NYSI indicator, the 9 EMA crossover system. It's been given excellent buy and sell signals over the years, but what you have here is a big divergence building while the S&P can continue to rally to new highs. This is clearly lagging. Again, this is showing the same divergence as I showed you on that indicator above with the NYOT. So just to be aware of those. Moving on, chart number 32, here's XOK technology. Still looks okay, right? But again, guys, XOK, this ETF technology, Microsoft and Apple make up 48% of it. So it's heavily weighted, and that's how the market has been. Chart number 33, here's transport, still has the same pattern, still has this kind of cup and handle look for now. So one for the bulls if this can hold up. Chart number 34, here is the financials. They've had a heck of an uptrend here, still holding this little steep uptrend channel line. Chart number 35, banks still holding this little pattern. 50-day moving average, that's your critical support there. You know, if we were to rally up again, get an open gap here that could be a magnet. The energy space, here's XLE. You know, I had a nice rally, stalled near that downtrend channel line, pulling back a little bit. Chart number 37, here's oil services. Now this one had a heck of a pullback from that channel line. So again, that's your main resistance, is this downtrend channel line. And finally, chart number 38, ExxonMobil. By the way, this makes up about 25% of XLE. Remember, we put this out as a long idea back here in mid-January off these dojis. It was an excellent trade. Hope you guys at least, you know, if you didn't sell all your shares, that's fine, but I hope at least you took some profits on that move, because that was a pretty nice move. Next, moving on to the bond market, chart number 39, high yield corporate. This continues to leak oil here, and this is a concern of mine because the S&P tends to follow this. Okay, remember, the bond market is bigger than the stock market by far. So here's a chart of the S&P 500 versus high yield corporate. And again, the two tend to mirror each other. Just take a look at it. But it's when you get these divergences, like here in July, when higher high in the S&P, lower high on the high yield corporate, that led to that correction. Then at the October lows, you got a positive divergence. High yield corporate started rallying, came off the lows while the S&P was going down, right? And that led to the rally. Well, what you got here, it's been building for the last month. S&P continues to rally up while this has not made new highs. You have a big old divergence here, okay? Next, chart number 41, here's the 10-year treasury yield. So remember, this had an ABC move up. I'm wondering if that was a wave ABC of A. This was also the largest rally in the downtrends. This was the symmetry break, which favored a higher low. So that could be a wave B, and we get a rally up to wave C. Now, if rates were to go up to this area, 50%, 61.8%, I got to wonder if the market would hold up into that. That could, I mean, or that could be a catalyst for the next sell-off. Just something to be aware of. Chart number 42, here's the TLT 20-year bonds. Had a nice move out of that broken trend line, obviously pulling back quite nicely. And chart number 43, there's the bigger picture view, the monthly chart of TLT. Otherwise, I still lean to that it formed a major wave 5 in October. It's working on this ABC counter trend rally that could take much of the year. But ultimately, remember, this is now in a secular bear market. And so ultimately, I expect a lower high. Next, moving on to commodities, chart number 44, DBC. Bounced a little bit near this trend line. Again, this is heavily influenced by crude oil. You can see the holdings right here. Chart number 45. Here's crude oil. Again, been leaking oil lately. We'll see if it can form yet another higher low or not. Obviously, that rallying dollar doesn't help. And, you know, again, it's predicated on a lot of things in the Middle East, what OPEC does, etc. Chart 46, copper. Remember I mentioned copper has sort of a head and shoulder look? Well, you can see it here. I mentioned this last week, but with this recent down move, this is looking more like a possibility, especially with that rallying dollar, or if the economy starts taking a hit. Chart 47, DBA, agriculture ETF. Remember, I've been bullish on this. After it broke this pattern, still holding up nicely. You do have a little divergence on the RSI, but still holding up well. Remember, on the weekly chart of DBA, you have this cup and handle look, and that's why I hold a swing position on this. Next, chart 49, URA, uranium, had a nice pop last week. Pulling back here, though. There is some active divergence to be aware of. And chart 50, here's a 60-minute chart. Remember, one method is moving stops up to each high or low. You got a higher low potential with this 3059 area. It's not confirmed yet, though, but should this start to rally again, I think you can move your stop up to that. And remember, on uranium, the bigger picture chart, I'm long-term bullish. I've been long-term bullish, guys, since late 2020 when it broke out of this multi-year base. We call that a Stan Weinstein base. You know, he had a popular book back in the 90s, How to Profit in Bull and Bear Markets. It's a simple book, but it's definitely worth reading if you haven't done so. Talks about these stage one bases and the life cycles of stocks. But anyway, broke out of the coil last year, and you know, maybe over time it can make it up to the supply area in the 40s. Chart 52, here's Bitcoin. Again, after forming that divergent high, it's bounced, but so far it's stalling here a little bit. I added some fibs to monitor. Chart 53, US dollar. Again, big old up day, up 0.5%, and it's up a little bit this evening. It's now approaching that 61.8 fib. This is an important area. We'll see if it can break through that or not. If it does, well, that'll put further pressure on the precious metals and maybe even the market eventually. No MACD divergence here in this move either. And moving to precious metals, here's chart 54, gold. Like I said, gold's down today. It's down 0.5%. It's holding up fairly well, but look at the stocks. This is the GDX-GLD ratio. It just continues to slope down. Okay, you need to see the stocks outperform. You know, I'm wondering if this comes down and takes out this recent low to complete a wave C, but definitely would like to see it hold above the 200-day moving average. Again, it's tough with that strong dollar and rates. Chart 55, silver down 1.64% today. Your longer-term supports that lower trend line. In December, it stalled at the upper resistance trend line. Chart 56, there's the monthly view of silver. Again, like a broken record, I continue to show this. It's in this big 4-year coil. Definitely plenty of room to move around and chop around inside the coil. I don't own a position. I'm not interested until this flushes out better. Chart 57, GDX, the miners. This is the weekly chart, down 2.36% already this week. Again, approaching the lower channel line or the coil line. Are we going to break it or are we going to hold it? We'll see. Chart 58, here's the daily. Again, you can see how price stalled at that broken trend line there. There's an unfilled open gap. To me, that's probably an immediate target. Next, chart 59, here's the bullish percent gold miners index. This is a BPGDM 8 SMA crossover system. It's not perfect, but it's a pretty good guide. You can see the buy signals there in October, November, and the sell signal there in December. It's been a pretty good sell signal. A BPGDM is now down at 32.5%. Next, chart 60, here's the Rinko chart of the BPGDM. And look at these excellent sell signals. Awesome sell signal there in May. Awesome buy signal in September, October off the oversold area. And another awesome sell signal there in December. Really nice, clean chart. And right now, it's essentially between no man's land between overbought and oversold. All right, let's move on to trade ideas. So, chart 61, NVIDIA. I mean, look at this. Up and away. It's getting, in fact, parabolic here. Up 4.8% today. Everything's about AI, and NVIDIA is the king. We had it as a long idea back here in January off this coil. One hell of a move. The KISS system caught this move as well, as I just showed you at the beginning of the newsletter. Driver 62, here's Microsoft. Beautiful move out of that tight coil. Again, absolute textbook pattern there. We had it on our watch list. Continues to hold up here. If you're long, you could probably have a stop right there at that higher low, or reference the KISS system table, see where it's suggesting a stop there. Kind of wondering where the stop is it's suggesting for Microsoft. Let's take a look. So Microsoft, current stop, the system has 391.80. So yeah, it's pretty close to that higher low. It's probably just below the 20-day moving average there. Driver 63, BDTX was a long idea of mine about a couple weeks ago. Broke out, had a hell of a trade. Hope you guys took profits on that. Awesome trade, pulling back now. Driver 64, ALPN was another one. This was a momentum play I had 2 weeks ago. Over 22 was your resistance, and one hell of a move. Congrats if you took it. This was not meant for a major swing. To me, I'd be out of it. It's had its move. You know, wham bam, thank you, man. Move on. Driver 65, FDMT was a long idea of mine last week. Huge gap up on news. I was not in it. I doubt most of you are in it because it never triggered over here. But if you got lucky and bought it inside the pattern, congrats. Hell of a move. Driver 66, Frog Networks, or Frog, whatever this coil, breaking out of the coil here on some expanding volume. Looks pretty good. Driver 67, NAS. I've had this on the watch list, a little low price stock. I said it was had a bull flag look. Starting to break out of this flag a little bit today. We'll see if we can get follow through. Needs to clear that 50-day moving average. Driver 66, NVEI, one it's been on the watch list. I still like this. It's holding the 50-day moving average here. You got a potential inverse head and shoulder look. If you can break out of here, your target zone would be the supply zone. Okay, this is better to look at an intraday chart. The Driver 69, here's a 2-hour view. You can see the inverse head and shoulder potential. So if you were to go long this, where would you put your stop, guys? Right there at that higher low. And obviously, then price needs to break out of the neckline here to confirm that. Driver 70, ACET, it's been on the list. Again, low price stock. I like the volume patterns here. It looks good. We'll see if we can move out of this. Kind of a rounded base. Rounded bowl pattern. Driver 71, AAOI, breaking some resistance here, one to watch. Driver 72, URI, here's a breakout if it can clear that resistance area. And it's already had a hell of a move, but maybe you get a quick pop through there. Driver 73, STNE, one to watch if it can take out resistance here. I like the longer term chart. Here's the bigger chart. So kind of like the Stan Weinstein bases, you got this multi-year base that is formed, trying to, started to break out of it. So we'll see if this can eventually rally. If it can, this could be a target area over time. Driver 75, MHK, breakout if it can clear this resistance. Driver 76, DOCN, coiling pattern. This could go either way. This could be a long if it breaks out. It could be a short if it breaks the lower trend line. Driver 77, Burlington Stores, coil pattern setting up. Could go either way. Driver 79, Snap, coiling as well. One to watch. That they're laying off 10% of their workforce, or 20%. IDXX, nice move today. This is one to watch for momentum over today's highs. Again, it's an expensive stock, but kind of a cup and handle look to it. And Driver 80, ON Semiconductors. Now this gapped up nicely today, but I put this on the watch list because volume was strong. It gapped over a downtrend. You call that a breakaway gap. A lot of times these don't fill their gaps for a long time, so it's one to watch for momentum. Anyway, guys, that'll do it. Have a wonderful rest of your evening. Thank you for all your support at Breakpoint Trades and, of course, on YouTube. And if you're on YouTube, consider subscribing. We have awesome systems, awesome analysis. Take care.